Hello, everyone. Good morning, good afternoon, good evening to all of you, regardless of which part of the world you are tuning in from. And I'm so excited, inspired, and also grateful to welcome you to yet another promising session of our weekly price action based technical analysis. As usual, we're going to be delving into the market structure to um, through a comprehensive price action based perspective, as we are going to be exploring the recent movement and, of course, chart patterns to uncover valuable insight that can help us to position ourselves ahead of both the London and the New York session. Well, in preparation for this live session, I already identified some simple setups that we're definitely going to be using today. And in fact, for those who are with me on both my trading view and of course the Telegram platform, would have gotten an update in that regard. So we are going to be looking into this. And as usual, we shall be relying on the power of trend lines, key level, and of course chart patterns to identify potential trading opportunity and of course get valuable insight into into the historical price movement of all the instruments on our watch list for this week. And so for the instruments on our watch list, we have the USDJPY, the XAUUSD, GBPUSD, and of course the USOIL SPOT. So we have been monitoring this instrument since the beginning of the week, and in fact we have been doing quite well, though there were situations where we had indecisive phases which happened about 48 hours ago before we started seeing some traction in the last 24 hours. So we shall be delving into this and see how we are going to be using the current market structure to determine what our next line of action will be. And for those who are joining us for the first time, you are highly welcome. I'm always grateful and glad to have newcomers in the house. And what we simply do here is a follow-up detail to the videos I share during the course of the weekend. So every weekend like this, I normally share our plans for the week. So we do have 4 financial instruments in our watch list, which I shared during the weekend. And of course, what we do here on the Forex Morning Mastery is to do a follow-up detail on it. So in that regard, we are only focusing on the 1 hour time frame. So this is where our execution time is, and this is where we always deliberate on during this live session. So if you do want to have a background knowledge of how we got to this point and how we were able to identify the trend lines and key levels you are seeing on your chart, then I implore that you need to watch those videos so that you can have a better understanding, and not only understand, but as well be able to take 1 or 2 things from this information in those videos to make your own independent decision. So I have the links to the videos right in the description box of this current video, so you can check them out after the session so that you can see what I'm talking about. And in fact, they are duly timestamped, so you can easily navigate to whichever aspect of the video is of your interest. So once again, you are welcome on board. And before we go deeper into the business for today, I would like some feedbacks in the comment section as regards to the audio and visual of this session. So if the sound quality is good or not, please let me know in the comment section so that I can do the appropriate adjustment to make our experience out here a blissful one. So I will appreciate some feedback, as this will help me to know that we are all on the same page. So with that being said, here we shall be going next into the economic calendar. And for those who have been with me for a while now, you would by now know how important checking the economic calendar is. And of course, the fundamental factors we see in there often manifest on the charts, in technical patterns, and of course price movements, And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And this also helps us for better timing in such a way that we can position ourselves ahead of, in such a way that we can catch any potential trading opportunities ahead of this event, during the event, and even after the event. So for today, Thursday, July 20, we normally focus on high impact events, and of course we want to be looking at events from economic dockets that affects the currency pairs we are looking at. And for this week we have the US economy, the Japanese economy, and of course the UK economy. But while looking at the economic calendar this morning, I realized that we really do not have any high impact event to look forward to. So what I did instead was to include the medium impact event so that we can actually have an idea of what market participants are anticipating today, as this will also help us to know how we are going to be positioning ourselves and how to use the market structure, the chart patterns we see, to capitalize on the next move. So for today we have something coming in from the, hold on a second please. So we have something coming in from, today is Thursday 28th, right? So we have something coming in from the US economic docket, and that's the initial jobless count. So this is a data that is released from the Department of Labor, and of course it's a measure of the number of people filing first-time claim for state unemployment insurance. So a larger than expected number indicates weakness in the market, which influences the strength and direction of the US economy. So generally speaking, a decreased number should be taken as positive, while a bullish for the US dollar. Now, if we look at the previous data here, we had about 237,000, which is quite on the high side. And from what the general consensus are projecting, we also have another 242,000, which is on the high side. And this is not a good signal for the US economy. So we are going to be looking forward to what the actual data will be. Is it going to be below expectations, beyond expectations, or even below expectations? Then we also have the Philadelphia, what's it called here? Philadelphia Fed Manufacturing Survey, which is this is a spread index of manufacturing conditions within the Federal Reserve Bank of Philadelphia. This is another event that majority in the market will be looking forward to give an insight into the economic situation of the US. Then we also have something coming in from the United Kingdom, that is the JFK's group. Consumer confidence is a leading index in the United Kingdom, and it measures the level of consumer confidence in the economic activity. A high level of consumer confidence stimulates economic expansion, of course, while a low level drives to economic downturn. So a high reading should be considered as positive for the pound sterling today. And if we look at the previous data here, we have minus 24 with an expectation that it's going to drop further to minus 26, which is not also a good sign. Remember, we had a very where was that this month? Okay, at the beginning of the week, we had an event coming from the UK economy, that's the price index, which was not a good, not a palatable data for the United Kingdom. And this one again is giving us something negative as well. So we are going to be looking forward to what the actual data is going to be. Then finally for today, we have something from the Japanese economic docket, that's the National Consumer Price Index, which of course is the most significant way of measuring the changes in purchasing trends. And of course, it also gives us an idea into the inflation status of the Japanese economy. And generally speaking, a high reading here is seen as positive for the Japanese yen. Now, from what we have here, the previous data came in at 3.2%, and we had a general consensus projecting 3.5% there. So we are going to be looking forward to what the actual data is going to be like. Then lastly, we have the CPI, and that is the Consumer Price Index released by the Statistics Bureau, a measure of price movement obtained by the comparison of the retail prices of a representative shopping basket of goods and services. So these are another high impact event that everyone in the market will be looking forward to, especially since we are monitoring the USDJPY, and a high reading is seen as positive for the Japanese yen. So we are going to be looking forward to what the actual data is going to be on all of these events. And of course, one thing peculiar about this economic calendar is that whenever we anticipate such events, we normally see how market participants are getting ready for the event, and this often reflects on the chart as price action, which is what we are trying to monitor here to understand the psychology behind every movement in price. So with this information we have gathered here, so we shall be diving right into the chart to see things from a technical standpoint. So the first instrument we are going to be taking on today is, of course, going to be the USOIL SPOT. So on the USOIL SPOT, we have an interesting situation so far this week, where we have been, though the beginning of the week was looking like price might likely be going to the downside after we observed the breakdown of this demand zone we identified between the $75.30 level and of course the $74.50 area. Remember, this was a very strong demand zone throughout the course of last week, as we saw that every attempt by the sellers to break through the structures has been met with strong resistance from the buyers, and we indicated this at the beginning of the week, as we saw here. We also saw what happened during the midweek of last week's trading session, and then on the final day of last week's trading session, we saw buy pressure again resume around that area. And on my video on the USOIL SPOT this last weekend, I was stating that I'm going to be expecting a bullish momentum just right above that demand zone based on what we saw during the previous week, which never happened, as we saw the new week started with a bearish gap, as you can see here, leading into a situation where price action did break down that demand zone. And you know, when price breaks down a demand zone, it is not reasonable to consider buying at that particular point in time, as we'll still need to see if the momentum to the downside will continue. And one interesting thing about the breakdown of that demand zone, let me zoom out so that we can see things clearly, is that the breakdown of that demand zone also coincide with the breakdown of this ascending trend line we identified at the beginning of the week, and this gave us a sign that we might likely be seeing a bearish momentum for this week, and that led into the idea of selling actually at the beginning of the week, as you will see here. So we sold the breakdown retest of the structure, and in fact price action moved about 70-80 pips in our favor before it contracted back into the entry zone. And you know how we do it in this community. As soon as price action moves significantly well in our favor, we of course want to be moving stop losses to secure the position. So if you had done that correctly, you must have been taking out at a worst case scenario break even at that point. So we had a couple of sell positions which was taken out at break even. Then one thing we observed here on Tuesday was that in as much as price has broken down that demand zone and of course the ascending trend line, we realized that sellers were struggling as soon as price gets into that $73.75 zone, which is the lowest point price action has ever gotten to this week. And every attempt by the sellers to break through that structure has been met with strong resistance from the buyers. We saw this happen on Monday. We saw that the momentum was not even strong enough to bring price into that structure. And right here on Tuesday, we saw another sharp rejection. And it was at this point we were starting to consider buying the USOIL spot. And one thing we mentioned here on Tuesday is that we are not going to be selling unless we witness a breakthrough of this support level to incite a sell-off. And if this is not happening, we are not going to be considering any sell on the USOIL spot, at least for the midweek. And as a result of this, we position ourselves just right above the $74.45 level to capture a bullish momentum. And it was at this point we had our first position triggered. That is our first buy position for the week. As we saw here, price action broke out of that structure, and we were privileged to maximize the potential of this bullish move as we saw another breakout retest of the $75 level, and of course a breakout retest of our key level situated at the $75.25 level. So it was quite a massive profit for us on the USOIL spot as we rode the move all the way to the upside. Remember, we also had here the privilege of adding more positions at the breakout of the structures during the New York session yesterday before that bearish momentum came in to shake all buyers out of their position. And if you had moved your stop losses accordingly, like we always do in this community, definitely you must have closed in a minimum of between 150 to 200 pips on the USOIL spot alone. So well done to everyone who has been part of this profitable journey on the USOIL spot for this week. Well done for being resilient and being on standby to catch every of this opportunity that we identified. Now, with the situation we have right now, we are getting ready for the London and the New York session. And how do we intend to position ourselves ahead of these trading sessions? So the first thing I would like us to do here is to run through my commentary on the USOIL spot this morning. So for those who are with me on my TradingView and Telegram platform, you will definitely have gotten an update in that regard. So let's run through that quickly and let's see what I said here. So this is my commentary this morning. I said here that the price action triggers a closure of all buy position. Of course, we had moved our stop losses and securing approximately 250 pips in profit on all 4 to 5 positions we had there. As trading activities reverts to the week's key level had the $75.25 area. Remember our key level. If you had watched my video on the USOIL spot this weekend, you would understand what I'm saying here. And if you haven't, please try and watch them, as you can also use it as an educational reference point to understand how to identify key levels on higher time frames. So I went on to say here that it's important to observe that the emergence of buying pressure above this key level may lead to further bullish momentum. Conversely, a breach of the key level could present selling opportunity, although we must exercise caution and wait for confirmation before considering any new position at this point. So this is where we were this morning on my commentary, and price action still remains around that area. So let's go back into the live chat and let's discuss what my opinion is based on this current structure. So since price action tested a new high at the $76.80 level, we saw our price drop back into the key level for the week. Now remember that our key level is situated at the $75.25 level, which of course was supposed to be our yardstick to guide trading activity for the week. And you know how we use our key levels in this community. If price action remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying. But if price action drops below the key level, we have no other choice than to start looking out for opportunities to sell that asset. Now, with the key level situated at the $75.25 level, we can see now that price has finally broken out of that key level after that shake off we saw here at the beginning of the week. That is this bearish move to the downside. Now we had a breakout of that key level on Tuesday. Tuesday's trading session was a breakout of that structure, and we all know from a technical standpoint that whenever price action breaks out of a key level such as this one we have here, we expect that one point in time price is likely going to come back, retest the structure in anticipation of another wave, have bullish momentum. Well, this is a technical expectation, and it's not all the time it happens. So we will need a significant confirmation to buttress that price action is really going to be doing a retest of that level to incite a trend continuation to the upside. Now, if we look at what has been going on here since the later part of the New York session, since price action came back into that key level, you will see something very interesting at this point. Now, let me zoom right in so that we can see, as this is going to be our center of focus for today. Now, as soon as price action tested the key level at the $75.25 level, what did we see here? We have seen continued buying pressure around this area. In fact, this is a clear sign that buyers are finding it cheap to buy the US oil commodity. Now, the question at this point is, will this demand zone hold to incite another wave of bullish momentum? Well, structure will tell us if it's so. Now, with the situation I have here, I'm of the opinion that price action is likely going to be transitioning into a reversal pattern. And you know how we do it in this community. When we begin to see price action evolving into a reversal pattern, the next thing we want to be doing is to identify a neckline that we are going to be using to validate the potency of that reversal pattern. Now, looking at the structure here, considering the impulsive move that brought price into this level, that is around the $75 area, psychological area, and since that moment, price is yet to break that low, and instead it has been finding higher lows. Though it hasn't found a higher high yet, but it has been finding a higher low, and for me this is a sign that a bullish momentum is gradually building up behind the scenes. And if this continues and price action continues to find support around this area, then we should have a neckline situated at the $75.50 level, which of course has been a major determinant of price action since the beginning of this week. Now, for us to confirm that this is truly a reversal pattern, then we want to see price action break out of that neckline. In fact, not just only breaking out of the neckline, giving us a confirmation that this is actually a good time to join a trend continuation. And this will of course reflect on the chart as price action retesting the $75.50 level probably a couple of times before we can now position ourselves ahead of the bullish momentum. Now, there is one thing I would like to say here as regards to this current structure. As soon as we have a breakout of this level, we want to be scaling down into our lower time frame so that we can capture those small moves that will give us sign that price is retesting that area. So as soon as we have a breakout of this structure, so for the sake of clarity here, since we already had a breakout but price is back below this level, I would like us to scale down into a much lower time frame. Let's use the 15 minutes time frame for the sake of this session, and let's see what price action is looking like around that area. So let me go back again into the 1 hour time frame. So I need to include the $75.50 level on my lower time frame. So here we go. So we shall go back into the 15 minutes time frame, and this is what we can see here. Now you see how things are gradually unfolding in that perspective. As you will see, we already have this touch, something like a double bottom structure, and the last 15 minutes we saw the breakout of this level at this point. In fact, price action closed above that area. Now, if for those who are already profitable on the US Oil Spot, that is, if you had accumulated profit based on the positions we opened so far, so definitely you're on the positive side of your US oil portfolio. So at this point in time, you could afford to leverage some of the profit you had made to risk a position above this area to capture a potential move to the upside. So if you are profitable so far this week on the US Oil Spot, then you could place a buy stop order just right above the $75.50 level, with your stop losses sitting somewhere right below the previous low, which will be dovetailing to about 40 pips stop loss thereabout, and let's see how far this move is going to go. However, if you are not yet profitable, that is, if you're not up any position for this week and this is going to be your first position for the week, then I will suggest that you remain patient for like an hour or so, where I want to see a breakout happen, then a couple of retests of structure forming something like a double bottom structure or a head and shoulder pattern before joining this bullish move to the upside. So this is how we are going to be managing a buy position on the US Oil Spot for today. Excuse me. For the US Oil Spot for today. So let's see how price action will play out from this area. Now, in as much as we're looking out for buying opportunity, you know how we do it in this community. Excuse me. All right. Okay, so in as much as we're looking out for buying opportunities in this market, you know how we do it in this community. We always ensure that we want to keep tabs with the opposite direction too as well. So as buyers, as the situation is looking more bullish at this point, we cannot ignore the potentials the sellers also have in this market. In fact, in the last 24 hours, it has been a very strong bearish momentum, and there is a tendency that this momentum could still build, gather enough energy to push further to the downside. So if that is going to be the case, what do we want to see on this chart that will make us want to change our idea from bullish to bearish? Well, the only thing I will say here is that we shall be looking out for selling pressure below the key level at the $75.25 area. Now, in this case scenario, we have been noticing buy pressure here. So we would need price action to take out all the buy positions here to give us a sign that we need to go bearish. And if you look at the structure, you will see that it's not likely that this will happen. But, well, what can we do if the market states otherwise? So if price action drops to the downside in such a way that it slices through with an engulfing bearish candle, taking out all the buy positions there, then at this point we want to start considering selling. But remember that we are not going to be getting too excited, as we're not going to be having a sell stop order below the structure in this case scenario, as we still need a significant confirmation for price action to show us that sellers are gradually gaining momentum. And one thing I want us to know here is that even if we cite a breakdown of the structure, it could still turn out to be a false breakdown. Now, for us to confirm that this is not a false breakdown, we would need to scale down into our lower time frame, where we want to look out for signs that buyers are finding it difficult to climb back above that key level at the $75.25 level. And this, of course, will reflect on the chart as continued rejection of the structure, selling pressure, or double top structure, and a pattern that supports the idea of selling. Then we could join the bearish move to the downside. And of course, we have multiple post levels here that we can actually use to maximize the potential of this bearish move. So these are my views here on the US Oil Spot for today, but I'm of the opinion that price action is looking very, very bullish at this point in time. Now, these trend lines here, I'm going to be deleting them as they are no longer relevant. This one right here is no longer relevant for here, so I will just readjust it to capture the lows here. As you can see, we just need to adjust it right here, and price still remains above that trend line for us to to support this position we are in. So if price action breaks down both the key level and the trend line, then we shall be looking out for confirmations on our lower time frame to join that bearish move to the downside. So that is how we are going to be managing our positions on the USOIL spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds out to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them to guide your trading activities for today. All right, so in the absence of no questions, I want to assume that we're all on the same page here. So we shall be moving on to the next instrument on our watch list. So the next instrument on our watch list for today is the GBPUSD. What an interesting setup we have here so far this week, as we have been selling this instrument this week so far. And in fact, we had a couple of high impact events coming in from the United Kingdom docket, which wasn't palatable for the pound sterling. And we saw how the markets reacted to this event as price action nosedived to the downside, giving us over close to 300 pips in profit on this one. So let's run through what our expectations were at the beginning of the week and what really incited the idea of selling the pound sterling. Now let's zoom right to how the week started for us here on the GBPUSD. Now, if you look at the structure here at the beginning of the week, remember the first important parameter here is that our key level, which was situated at the 1.3100 level. If you had watched my video on the GBPUSD, you would have seen how we were able to identify this level and how we said this level is going to be serving as our yardstick to guide trading activity for this week. And you know how we use our key level in this community. As long as price remains below our key level, we of course want to be looking out for patterns and structures that will support the idea of selling that asset. Now, if you look at the GBPUSD on this chart 1 hour time frame, you will see that most of the time this week price action remained below our key level, which was actually a sign that sellers are still very, very strong in this particular market. Now, in addition to that key level, we added this as this descending trend line after connecting the series of lower highs, as you can see here. And we said here on Monday that as long as price remains below that descending trend line, we are going to continue to sell, look out for patterns and structures that will support selling. But if price breaks out of the trend line, then we want to be looking out for buying opportunity. Then in addition to that trend line was this range, which we spotted between the 1.3100 level and of course the 1.30280. 30820, sorry, and we had a beautiful flat channel to work with. And you know how we use our flat channels in this community. As long as price remain within that range, we want to wait patiently for a signal which could come in the form of a breakout or breakdown of that range to give us an opportunity to trade. And remember, we had our buy position triggered here on Monday, which never lasted long around that area as we got stopped out in a loss on that one as price action spiral all the way to the downside, triggering our sell stop order here to move about, how many pips was that? I think we saw price moved about 30 pips thereabout before we were taken out, and the appearance of buy pressure led into a situation where price action broke out of that descending trend line to give us a sign that we are likely going bullish. So we saw the breakout of the trend line, we saw price retest structure, and in fact we were part of this bullish move which led to the breakout of that key level. And you saw here that though we saw the price move to the upside, it didn't last long. It turned out to be a false breakout, and of course we moved our stop losses accordingly, secured the position, and we were taken out had a worst case scenario break even on that one. Then remember also on that same day, we acknowledged this ascending trend line. I think that was on Wednesday, right? On Tuesday, of course, we acknowledged this trend line, which we said we were going to be using to guide our trading activity for Tuesday's trading session. And one thing we agreed here is that if price remains above that trend line, we shall feel comfortable buying the GBPUSD. But if we do see a breakdown of structure, we are going to be getting ready to sell. Now we saw the breakdown of the structure happen here. We saw the breakdown happen. Price came back to retest the structure, and I also added another level here, which I said if after being triggered at the 1.3082, we want to be adding another position had the breakdown of the 1.30750, and in fact we add two positions on the GBPUSD, and of course we rode that move all the way to the downside. And I told you I hit my TP target around this area. So we had roughly 250, close to 300 pips on that single move. And during our live session yesterday, we acknowledged how price action was within a beautiful confluence here at the 1.293, which of course also shares a confluence with that ascending trend line we identified on the 4 hours time frame. So for the sake of clarity here, let me share with you what is looking like on the 4 hours time frame. And on the 4 hours time frame, this is what we saw here. Remember at the beginning of the week we had this beautiful ascending channel after connecting the series of higher highs and higher lows in this market. And one thing we talked about here yesterday during our live session was how price action is within a critical point in this market, and that is the support line of that ascending channel. And in addition to that is a key level at the 1.293, which has been a level that held buying pressure at one point in time. We saw the breakout retest of the structure last week, and you all know from a technical standpoint that whenever price action breaks out of a key level such as this one right here, we expect that one point in time price will come back to retest that structure, probably to incite another wave of bullish momentum. And in the last 24 hours now, price action has been around that level, giving us a sign that we are at a critical juncture in this market where anything could happen. Now at this point in time, price could respect the ascending trend line one more time to incite another wave of bullish momentum, or probably drop below the ascending trend line to incite a sell-off. So you can see there are two things that could happen around this area, and the only way we can decipher what could happen is to try and see what the price action is gradually transitioning into. What kind of pattern is it transitioning into? That's what we want to know here. Now, taking a closer look at the structure here, you will notice that price action has been ranging between the 1.29600 level, a very strong psychological area considering the round figure of that price, and of course the lowest point here had the 1.28850 level to give us something that is looking like a consolidation phase at this point in time. And in fact, this range we have here could transition into either a reversal pattern or a trend continuation pattern. So it could turn out to be a bearish rectangle, something like this. Hold on a second, let me share. It could turn out to be a bearish rectangle, something like this, that will lead to the breakdown of the support line to incite a trend continuation. That is one possibility here. Or it could even turn into a rising wedge where price will just have to break out to the downside or break out to the upside to incite a reversal pattern. So this area here is a very critical confluence where we need a lot of patience here to determine what our next line of action. And in fact, it could turn out to be a double bottom structure. You can see the lowest point price action got to this week is around the 1.2880, and since then price is yet to be able to break down the previous low. So if this happens, that price does not find it easy to break down the previous low, we could have a situation that could turn out to be a reversal pattern in the form of a double bottom structure. And if this turns out to be a double bottom structure, then we are likely going to be looking out for a neckline that we shall be using to validate the potency of that pattern. So we have a neckline here at the 1.296, where the breakout of that structure will definitely be welcoming an opportunity to join a trend continuation. So you can see how important this zone is. You really do want to mark out those levels on your chart. Then another thing here is price breaking down the 1.285 could welcome selling opportunities here. So what we are going to be doing now is to scale down into the 1 hour time frame, as we want to see what patterns are forming along that area to decide what our next line of action will be. So scaling down into the 1 hour time frame, you will see things more clearly here. So I would like to delete some of these parameters here so that we can have a clean chart to work with. So our center of focus is just right here. And so while I was trying to decipher what our next line of action is going to be like for today, I was able to come up with a trend line, which I said we are going to be using to guide our trading activities for today. And if you look at how price action has been playing out since the beginning of the week, you would notice that price has been finding lower highs here. And when we connected a series of lower highs, I have this descending trend line we shall be using to guide our trading activity for today. So you really do want to mark this level out on your chart, as we're definitely going to be using this to capitalize on any potential move during the London and the New York session. Now, excuse me please. So now, with the situation here, you know how we use our descending trend line in this community. As long as price action remains below the descending trend line, we of course want to continue to look out for selling opportunities. But if price action breaks out of the trend line, then we could likely be getting ready to buy the GBPUSD. But presently, price remains below the descending trend line. So if you still have a sell position right now, you are still within the seller's territory at this point in time, and we can look forward to more selling opportunities if price action finally takes out the previous low where we saw buy pressure here. Then at that point, we want to be adding more sell position. As you can see, price still remains below that descending trend line. So that is how we are going to be selling the GBPUSD for today. However, if price action finds it difficult to break the previous low that we have here, then we are likely going to be seeing a reversal pattern, which is going to be coming in the form of a double bottom structure, as you can see here. So if price does not break down the previous low, then at this point we will start considering buying the GBPUSD. But one thing of course we want to do here is to have our neckline marked out, which of course coincidentally shares a confluence with the 1.29600 area, where a breakout of that level will definitely be welcoming an opportunity to buy the GBPUSD. Now, one interesting thing about this setup is the fact that if price action goes on to break out of that neckline, it would have also broken out of that descending trend line, which would be the first time price action will be breaking out of that descending trend line this week. And coupled with a higher low, I'm of the opinion that if a trend line is broken, we are likely going to be seeing a bullish move at that point. So we might be able to join the bullish move even before the breakout of the neckline happens, hereby maximizing the potential of this move. So whenever the neckline is now broken, we would already have two positions running at that point. So let me give you a visual representation of what I'm talking about here. So if price action breaks out of the trend line and of course the 1.293, we want to be getting ready to buy. So if it goes on to give us a retest of structure, maybe the retest of the trend line or the retest of the 1.293 followed by buying pressure on our lower time frame, we want to join a buy position and have a buy stop order above the 1.296 to capture the uptrend continuation. So you can see we can actually capitalize on this move by having two positions by the time price action breaks out of that 1.296. So at this point in time, we are still going to be considering the potentials that the buyers have in this market. We've sold for the last 24 hours. Let's see if market participant will see the pound sterling cheap enough to start buying again. Now remember that the pound sterling has a very high interest rate, giving us a high yield on investing in the pound sterling, which is something very, very attractive to investors in the market. Now the question is, when will market participant consider the pound sterling cheap enough to buy at this point? Is it going to be at this area? Well, if we start seeing a reversal pattern, then we definitely want to be getting ready to be part of the next bullish move in this market. But if price action continues to stay below the descending trend line, leading to the breakdown of the 1.2885, then we will have no other choice than to continue to add more sell position to our portfolio. So that is that on the GBPUSD for today. So if you have any questions regarding the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the comment section and see if there are any questions before we move on to the next instrument. And you can as well use that time to mark out these levels on your charts. I see your comment, Gabi Garcia. Good morning, Gabi Garcia. You said you're trading like a retail. Well, I don't know what that means. Is that a compliment or I don't know. How are you doing, Gabi Garcia? I trust you are doing very well. I'm sure you are new with us, I guess. And welcome on board. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving on to the next instrument on our watch list. So the next instrument on our watch list is the XAUUSD, and that's my favorite commodity, my favorite asset, and we have been profitable so far this week, but yesterday's trading session was not too palatable for us as price action kept on consolidating throughout most parts of the the New York session yesterday, and in fact I missed out on this bullish move that happened later on in the night, as I had all my buy stops order taken out. But if you had kept your buy stop order, you would have been part of this profitable trade here. So let's run through what really happened during yesterday's trading session. So prior to yesterday's trading session, we had been buying the XAUUSD. As you all know, we had this ascending trend line figured out, and we said as long as price remain above that ascending trend line, we shall continue to look out for buying opportunities. But during the live session yesterday, during the New York session yesterday, we begin to see attempt by the sellers to break through the zone. So it was quite a very choppy mess around this area, which was quite exhausting, as we never knew what would really happen. And in this kind of scenario, you know what we normally want to be doing: wait patiently for either a breakout or breakdown of that range to give us an opportunity to trade. So we were in a sell position most of the US session yesterday, and it finally went into a loss for me on this one, as we got stopped out during the later part of the New York session. So it was quite it was not an interesting day for me on the XAUUSD. But now, with the current situation going on right now, it appears that a bullish momentum, a new phase of bullish momentum, is beginning to unfold, as I can see here that the previous ascending trend line have been left behind, as price is no longer respecting the ascending trend line anymore, as we begin to see new trend lines forming at this point. Now, if we take a closer look at this structure and let me bring out my line chart here so that we can have specific points of connection, you will notice that we have another trend line. This is the previous low here that was yesterday's trading session, and there's the new higher low here. So we have a new trend line to work with for today. So I would like to reduce the pixel on this one, as this is no longer needed, and this one too is no longer needed. So I'll just reduce the pixel and leave this one thicker to emphasize its importance at this current structure. So let's go back to our candle chart and do some readjustment here to fit in the pivot lows, and here we go. We have another new ascending trend line that we are going to be using to guide our trading activity for today. And of course, you know how we use our ascending trend lines. As long as price remains above this trend line, we of course want to be looking out for patterns and structures that will support a trend continuation to the upside. Now look at what has been going on here since yesterday. For those who are taking advantage of this opportunity, well done to you guys. I personally missed out on this one, as I took out all my buy stop order before I went to bed yesterday, and you see what happened. Price action has come back again to test that ascending trend line, and we might likely be seeing price action continue to the upside. So for people like me who have missed out on this opportunity, of course we are still very profitable on the XAUUSD despite that loss. I'm going to be having a buy stop order above the $1,984 level to capture the uptrend continuation, and with a stop loss sitting close to that support line here, that's about 45 pips, or you can extend it to about 50 pips. Let's see how far this bullish momentum is going to go. So on the XAUUSD today, things are still looking very bullish, so I'm positioning myself just right above the 1,984 level to capitalize on this move. Now, one more thing I would like to state here again: we have another structure here, another level, which is the highest point price action has gotten to for this week. Another area we can also use to capitalize on the next move. So we have it at the $1,987.50 area. So we just mark that level out on our chart. And then we have, hold on a second. Then we have, okay, so we're going to be looking forward to another breakout retest to join that trend continuation to the upside. So as long as price remains above this trend line, we shall feel comfortable in this buy position. Now, in as much as we are looking out for buying opportunities here, remember we cannot ignore the potentials of sellers too at this point in time. So if price action breaks down that ascending trend line and the 1,979 level, of course we want to be getting ready to sell the XAUUSD. Now look at what we have here, a beautiful confluence, isn't it? 1,979 and the ascending trend line here. So if we do have a breakdown, then we can start considering selling the XAUUSD. But remember, we are not going to be jumping right into that sell position, as we will need a confirmation to happen. So once the breakdown of the ascending trend line and the 1,979 happens, we scale down into our lower time frame to look out for confirmations that buyers are finding it difficult to climb back above the ascending trend line. And this, of course, would reflect on the chart as a retest of structure followed by continued selling pressure before we can now join that bearish move to the downside. But trust me, I will be with you in the comment section on both my TradingView and Telegram platforms to give you updates as at when due. So this is what we shall be looking at on this current market structure to guide any bearish momentum to the downside. I still think that the market is looking very bullish at this point as long as price still remains above that ascending trend line. So let's mark these levels out on our chart. It's a simple setup. Don't let us get things complicated, and let's see how far this momentum is going to go. Now, congrats to everyone who took advantage of that buy position yesterday. As personally, I missed out on it. So well done to you for being on standby to catch that move. So on this note, I think we are done on the XAUUSD. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the last instrument for today. All right, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving right into the last instrument for today. So the last instrument on our watch list for today is, of course, the USDJPY. So on the USDJPY, it's very interesting, you know. Remember, let's run through the beginning of the week. Let's run through how things evolved along during the course of the week. So at the beginning of the week here, remember that we acknowledged the appearance of a reversal pattern in the form of a head and shoulder pattern here. So after taking into consideration the impulsive move that started last week, we saw something like this. And then with this situation here, we were thinking that price action will definitely want to break out of that neckline area, which was also serving as our key level for the week at exactly the 138.800 level to incite a buy opportunity in this market. But one thing we saw here is that despite the fact that price was gradually trying to form the right shoulder, we saw a bearish momentum coming from nowhere. And one thing we saw here, though we had a buy position initially, we saw the breakout of the neckline. We took advantage of that move, and in fact that move went to as far as how many pips? About 50 pips before the selling pressure began. And remember, we moved our stop losses to secure this position as price dropped to the downside. And I told you I re-entered again, which went into a loss for me at this point in time. Then we had some couple of sell positions, of course, before we begin to notice here on Tuesday that this area around the 138.00 area has become a difficult level for sellers to break through. And look at what we've been noticing here since the beginning of the week. We noticed how sellers found it difficult to break through. We saw buy pressure resume. And in fact, on Tuesday, we saw a sharp rejection of this area, which further buttressed the strength of the buyers around that area. And with a two-time test of structure, it's a clear sign that sellers are finding it difficult to break down that area. And as a result of this observation, we decided to position ourselves right above the 138.375 to capture a bullish move. And as you can see what happened, price action broke out of that structure, and since that moment we have been buying the USDJPY. Remember, we also added more positions, had the breakout retest of the 138.850. Then remember also we added another position, had the breakout of the 139.500 level. So we had about 3 positions running, and not until the early hours of today we got taken out of all the buy positions we had around these areas. This was where our stop loss was yesterday. So well done to everyone who has been on this profitable journey. So right now we don't have any trade running on the USDJPY. So going into the New York session, what is going to be our plans for today? How do we intend to capitalize on the next move? Is it going to be bullish or is it going to be bearish at this point? Well, the first thing I would like us to acknowledge here is that since price action tested the new high, had the 139.900 area, we begin to see some selling pressure resume around that. No, in fact, it's the 140. Let me readjust this. It's the 140. I think I did a mistake here. It's supposed to be the 140 level. A very strong psychological area considering the round figure of that price. So we saw that as soon as price tested that level, we saw a first rejection. We saw the second rejection, which is a clear sign that sellers are present around that area and buyers are struggling to even break through that area. And since price tested that level, we have seen a situation where price has been finding lower lows and lower highs. And if we bring out our line chart to connect the series of lower highs, we should be having something like this. I'm of the opinion that, let's see, okay, this one right here, and let me reduce this one a little bit. Then if we bring out our candle chart, we can now do some adjustment to fit in the pivot lows, as you can see right here. So we have something like this. So price action has been finding lower highs and lower highs and in fact lower lows in this market, giving us something that looks like a descending channel at this point in time. So going into the New York session today, how do we intend to join any potential move here? So if we consider the lower highs and lower lows we have been seeing here in the last 12 hours, last 24 hours now, a bearish momentum is looking very promising. And in that regard, it will be more reasonable to look out for selling opportunities below the 139.500 because this falls along with a descending trend line. And if selling pressure resumes below the structure, we will be selling the USDJPY to the downside and maximizing on that move if price action continues to break down the 138.850 level. So that is how we are going to be considering selling today. And even if price continues and it breaks down this structure here, there's another psychological level around the 139.200, which if it is broken to the downside, we want to be adding more positions to that. So I would like to label this one 139.200 level. So you want to be marking out this level too on your chart. Then we want to be selling again if price action drops below that area. However, if instead price breaks out of the resistant line of that channel in such a way that we see something like this, then a retest of structure will be giving me a confirmation to join a trend continuation to the upside. In fact, this is looking more promising here if we consider the fact that price action has been bullish since the beginning of this week. And in fact, to guide that move, we have a level here. So if I bring out my line chart, you will see that we have something around the 139.700, which we can of course use to capitalize on an uptrend continuation in this market. So we can have a buy stop order above that area. Of course, we've been profitable so far this week, as we can afford to leverage on the profit we have made so far to capitalize on that move right there. So if price action breaks out of that structure, we want to be adding more position to our existing trade and looking forward to further breakout of the 140.00 level to maximize the potential of this bullish move to the upside. But if continued selling pressure happens below the 139.500, we want to look out for selling opportunities. Now, for the sake of this session, now that we have selling pressure resuming around this area, I want us to scale down into a much more lower time frame to look at things together here and see how we can capitalize on this move. So we'll go down to the 15 minutes time frame first of all, and this is what we have here on the 15 minutes time frame, a clear sign that sellers are pushing price to the downside. So I would just like to readjust this one, and then you will notice that we have something like an ascending trend line which will help us to capitalize on this move. You can see how important our trend lines are and how they help us to maximize the potential of any move at this point. So I will be having a key level to guide that bearish move. So let's have something at the 139.400 area. So I will give this a different color instead to emphasize its importance. So we have the 139.400 level marked out, and then we want to be seeing a breakdown of that structure to join a bearish move to the downside. So we are looking out for selling opportunities just right below this level. So this is how we are going to be selling the USDJPY today. But if price action goes on to break out of the 139.700, we definitely want to be looking out for buying opportunities. So this is how we are going to be capitalizing on any potential move on the USDJPY today, and it's on this note I want to call it a day. But before I do, let's see if there are any questions whatsoever in the comment section. So I'll be taking the next 10 to 15 seconds to see if there are any questions. If you have questions, feel free to let me know, and trust me, I am here and willing to be of help in that regard. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So it has been a wonderful experience with you here. I really do appreciate every single inch of time I spent with you here today, and I'm very confident that we are ready to capitalize on any potential opportunity during the trading sessions today, as we were able to simulate all the potential opportunities that could come up around the current market structures that we have been monitoring since the beginning of this week. Well, if you have found this content helpful and useful in making your independent trading decision, please, I would greatly appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it helps the YouTube algorithm to push the video to a wider audience of traders who may find this material and content useful to them. Thank you in advance for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. So thank you very much everyone for the support, and I look forward to seeing you right in the comment section of both my TradingView and Telegram platform. And of course, we are going to be going live 15 minutes into the New York session to monitor the XAUUSD live right here on the YouTube channel. So I look forward to seeing you right there too in the comment section as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.